Hey everybody, Economic Ninja here. Got a story for you. It's out of CNBC, and this is a warning story, okay? Because this is a story about how the rich, the exclusive, the elite are diving back in the stock market, and I think it is a very scary time for stocks, quite frankly, because right now they're putting these stories out on the heels of the S&P being up for 5 days, I believe it is, and because they're saying the inflation report's great, things are coming back to normal, but I'm not a financial advisor, a financial professional, but as an investor, I'm leery, and I believe that we're going to see a big correction in the fall. So with that being said, as we read this, if you want to get into stocks or you're into stocks, educate yourself. I've got the link to that course for Johnny, a discount code for his swing trades and stock trading course on how to read use technical analysis to your advantage. Remember, we've talked about cycles. He's really big on the 200-day moving average. He wants to teach people how to trade stocks. I know Johnny personally, very successful person. He knows his stuff, and so that's why I endorse this, and I have that link, that discount link for you guys below if you want to, but that is all about education. You cannot just pick stocks based off of a story that comes out of CNBC, but look at this. This is the rhetoric they show you. This is what they do to hype you up, and oh, everything's okay, you know, buy in, but who's selling in the background, okay? So let's read this story, and I'm going to link it below. Tiger 21, an exclusive club of investors, says the ultra rich are doubling down on stocks. Now, doesn't that sound like a cheerleading thing for you, right? Now, don't get me wrong. Do I think you can make money on stocks right now? Absolutely, because you can make money when stocks go up and stocks go down. You just need to know the indicators, the signals. You need to be able to control your emotions and all that stuff, and that's why you have to invest in yourself and educate yourself, okay? That makes education leads to better decision-making process. So that's why I say there's nothing wrong with buying stocks right now, but what I'm saying is you have to be very careful, and it's what stocks you buy, okay? Like right now, I'm in the mining sector because I expect, as inflation to go up, I expect mining stocks to do very well over that period of time because as inflation ticks up, gold is going up. We're at right now, what, $1,800 in gold, where in 2020, when all this stuff was starting, we were at a much lower gold price. Okay, so on a percentage basis, these things have done well. All right, here we go. Back to the story. Sorry. It says Tiger 21 consists of 1,200 members with a cumulative $140 billion in assets, and individuals must have at least $20 million in liquid assets to qualify for membership. So that's some pretty rich people. Its founder and chairman, Michael Sonofet, told CNBC on Thursday that although real estate had historically been the most popular destination for members' money, they were now seeing some real bargains in the stock market. Now, this is that stuff that goes, oh man, if the rich are doing it, I should be doing it, right? This stuff just, it makes me nervous. It makes me totally nervous, right? And these people, they didn't get where they were by being dumb, right? On top of that, they didn't get where they were. So when I say dumb, they're educated. They educate themselves. They hang out with educated people. That's why I'm stressing the need for education for you. Read books, take courses, learn as much as you can, become a more disciplined investor, all right? So that you don't fall prey to all of the wild speculation that's about to start. I'm not joking. I believe in the next week or two, you're going to see crazy speculation pushing into the stock markets. All right, it says, this in part pushed let's go back. Its founder and chairman, Michael Sonofet, told CNBC that although real estate had been historically, the way they made money, there's some real deals in the stock market. Said this has in part pushed public equities to the #1 spot for Tiger 21 for the first time since the network's inception. Sonofet said members are not focused on stockpiling. For the most part, so much of the equities investment is channeled into ETFs and index trackers. While technology has been among the most popular sectors, public equities constitute 27% of the membership's overall asset allocation. And again, you have to realize the reason why they're pushing these public equities is because with inflation, people start to dive into the stock market all throughout history to be able to save purchasing power. We've seen this in Venezuela, we've seen this in Argentina, we've seen it all over the country, all over the world, where countries start to push into, from inflation to hyperinflation, they push into the equity markets and they go up. But usually they do not go up at the same rate as food and energy. All right, so I want you to understand that. But that is a way that wealthy people throw their money into something to be able to get as much bang for their buck while everything's inflating or hyperinflating away. All right. He says you have a lot of the FANGs that have come in from much higher prices. They are thinking there's a lot of benefits there, and obviously one of the big areas is energy, not only on the oil and gas side, but much bigger growing interest in renewables and how to play the solar opportunities, the wind opportunities. Again, we've been talking about this, the whole green initiative. The world wants to go green, right? Governments all around the world want to go green, so they're starting to shove money into these. What I'm concerned with is I want you to do some, if you've never heard of the company Solyndra, I want you to go and check that out, because when that came out during Obama's term, that was all the big hype, and it went bust, right? A lot of money was shoved into it and it went bust. And that's what I'm concerned coming into this next season of renewables, as people dive into this sector and they're going to start picking names. But you're going to start seeing companies coming out, like almost shell companies with nothing behind them, you know, touting all of their big plans, and they're essentially speculations. They're just speculations. There's nothing there. There's no working product. There's no money behind it except for government money piling in, and then the executive team just leaves. You have to be very concerned with that. That's why you have to do your due diligence. I'm not a financial advisor or professional. I'm just an investor. I want to make money. I don't want to lose money. I've lost money before. I've learned those lessons. Those are not fun lessons, but they're great lessons if you use them to your benefit in the future, right? So guys, I'm going to link this story below. I don't want to go too deep into it, but I really just wanted to explain what the narrative is. We want to fight the narrative. We want to make our own decisions and be successful, okay? So again, take a look at that link below. If you want that course on technical analysis, I want to say it's under $300 right now. So I think that's a good value, instead of losing $300 on a speculation where they say a bunch of rich people are running in and you should too. That is what makes me nervous. I want people to be educated and be able to make good decisions so that you can make good money and go out and prosper. I want the good people of this world to have the money, not the bad people. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.